Welcome, everyone. So you've been waiting for an update from Voxtur, from Gary. So I'm sitting down with Gary, and we're going to do an update. You submitted questions. I submitted those questions to Gary, and so that's what we're going to do here. Gary's going to read the question and answer to the best of his ability. So Gary, thank you for doing this. Let's get started.
Okay, well, thank you very much, and thank you all for having me on the call, and thank you for your submissions for the questions. The questions that we've basically organized them for is about profitability and survival. More specific questions about Blue Water, about our title business, about ANOW, about AOL, and about RPTA. A few questions, about the management team and the changes taking place. Some about, our former CEO, new clients, and some other general questions. So there may be some repetitive things happening in here that I may have already answered. So we'll just read them out, and if I've already answered that, then I'll say that. It's just a ton of stuff here that I'm doing my best to try and get through and be as informed and as transparent as I possibly can. There's no question about it that we've been through the ringer. There's been significant changes in the marketplace. Interest rates have tripled. They have had an impact on our company, but I think that by the time that we are finished today, as honestly and as transparent as I possibly can, I believe with absolute confidence that there is a silver lining ahead for us. And the journey for us to get there, especially the changes that we've had to make in the last 12 months, have been daunting, to say the least. But we have a plan, we have a strategy, we have a vision, we're implementing it, we're working it every day, and we'll talk about that. So I'll just get through the questions right now. Again, forgive me if there's been some duplications, but we'll get through this as best we can, and hopefully everyone has had an opportunity to get some clarity on some of the concerns or issues that we have. So let's just talk about profitability and survival. We've got a group of questions in here. It said, if macro environment stays the same, what does Voxtur need to achieve profitability? We're on the road to profitability now. We believe that the first quarter of 2004, we think that 2004 is going to be, a very good quarter for us, and we hope to continue along that play. Obviously, there's lots of things that can happen in the meantime, and so this is not, prognostication, as far as insight, as far as exactly, what we're going to do. But we needed some of the new businesses that we bought to have to make some adjustments because of interest rates tripling and, bringing out new service offerings, etc. So we think that we're in a real good, shape as far as our way forward. So, as interest rates continue to fall, there's going to be more transactions. There's more opportunity for us to be even more profitable. But we think that given the marketplace where it is today, because of the uniqueness of our service offerings, we think we can be profitable now. Next question, how able is Voxtur to survive and complete the product offering without additional capital injections and get through a profitability? As I say right now, our biggest challenge right now, and we're dealing with it, and I've said this, 6 months ago, is that we're going to be involved in some dispositions of non-strategic assets. The focus of our company is going to be focusing on technology service offerings, and where we have low margin, low profit margin businesses that require tremendous boots on the ground, we are going to be making changes in that area and replacing that with technology. Case in point, some time ago, we made an announcement, we sold our valuation business. Why do we sell our valuation business? We love the operator, Al Broadway, and the whole team. Great business. However, it had 100 people. And if the transactions went down even further, they still needed 100 people because of regulatory licensing and compliance. At best, it was a 10% profit margin business. And at worst, transactions even fell, then there's no way it could make money. And, with the number of people it had, it's a very difficult business to be in. Which way is the business changing? Yeah, as I said again earlier, the business is changing, and we expect, and there's lots of people that are, that will also share, in this expectation, is that Fannie and Freddie came out with an acknowledgement that there will be a transition on a number of properties where instead of having a full appraisal, where you have boots on the ground appraisers going out and charging their $1,000 and taking the 21 days to get that valuation done, is that there are a number of properties where they have a pretty good empirical evidence so that they know the valuation without having to go through all those steps. But what do they want in lieu of that? They want a sketch, they want a floor plan layout, they want data integration, and they want to combine that with an automated valuation model, which both the Fannies and the Freddies have. So why did we buy Apex? Because it was the #1 sketch application in North America. It's ANSI certified sketch. It is a web-based sketch. And so essentially what we're doing is combining that sketch along with the floor plan layout, and we've already been approved by Fannie on our data integration tool, so that over the course of the next 24 months, we expect as much as 40% of all valuations to be done using technology. And so our view is, if we're not an AMC, which is an appraisal management company, which is what we were before we sold the zone business, let's be a technology provider. Let's focus on providing technology services to other AMCs, to lenders, to any type of variation in between. Because if we look at the competition right now, most of the people that have developed, sketching and floor plan layouts, or variations thereof, are all existing AMCs. So if I'm in a appraisal management company and I need a sketch and a floor plan layout, why would I be paying my competitor to provide us with that service? The difficulty right now is that there's not enough people that provide that. So we're knee deep, and part of that is because we bought Apex. We got a massive head start. So we're just in the process right now of trying to finalize the sketch and the floor plan layout, which we have. Big advantage that we have, it is a web-based platform that we're offering. It is not where we have to take a whole bunch of pictures, stitch them together, outsource it to offshore companies to provide that and wait a day later to get that information back. We have a web-enabled platform that will provide sketching and floor plan layouts. On top of that, we have a data integration tool, and we have obviously all of the data through our Benutech to be able to populate that that data collection tool. And our plan is to sell this technology to existing AMCs, so we don't have to put together our own appraisal panel. They can use their own. We don't have to rely on who's going to be taking the pictures and who's going to be using the cameras to be able to use our technology to put that together. So what we've done now is we'll be creating a partnership with all AMCs, and for those lenders and that don't use AMCs that want to deal with us directly, we will have that capability of dealing with everybody in the country. So we will be a technology provider. So we'll get 100% of everything, albeit a smaller amount, and the profit margins are going to be significant. No longer is it a gross margin of 30% and a profit of 10%. We're expecting gross margins, above 70%, above 75%, and profit margins above 50%. And that's the way we're going with the business. We understand and fully realize that it's going to take a couple of years and an evolution as far as getting into that. But we think that #1, because we will have the best, most reliable sketching, technology platform, on the planet, vis-a-vis through Apex, coupled with the floor plan layout, adding our data integration services, combined, and providing that whole offering to an AMC that they still have work. They still have, their own appraisal services that they do with this transformation, but they can buy technology from companies that don't compete with them. So we're really, really excited because, if we, when I look at the valuation we had before, we had less than 1/2 of 1% of the national marketplace, and it was very, very difficult to grow. We didn't want to add a ton of more people and be exposed to the market even fell further. So we believe that we can get 25% of the sketching market. So if it does, transform into 40% over the next 2 years, 25% of 40% is 10% of the overall marketplace. A massive growth for us, opportunity. And so as interest rates lower, the number of transactions or more is going to benefit us more. So again, using technology, that is the key for us. And so, with that, we don't believe that we're going to need cash injections. We don't believe that we're going to have to go out and try and raise more money in the marketplace. And so, that's kind of our road to, to victory, so to speak. What is the cash situation like? Do you need to withdraw more money? Does the bad cash situation affect partnerships and contracts? Well, we're working very closely with the bank. We do have enough cash to last us for a while. We do expect, over the next months and definitely this quarter that we're going to be cash flow positive and EBITDA positive. Each of our businesses are growing, and it is our hope that we will be probably have further transactions, non-strategic, non-technology based businesses that we can move and basically eradicate the debt. So we're hoping that at some point in time, if not in the third quarter, first quarter, but definitely in the second quarter, we do believe that all of those issues with the bank will be dealt with. We have a number of different potential offerings that we're dealing with right now, so they're real and apparent. And our goal is to basically remove the debt. I've worked closely with the bank. They're a big supporter of us. They have big confidence in us for the future. And I think that, with what has happened, in the industry at large, I think it's caused everyone to pause and to right size and to adapt. And that's exactly what we're doing. But we have a ton of assets. We have a great strategic plan and a vision. And, those that felt that we're in peril, that, that there's insolvency or whatever else, it's unfounded. And, I can't address all of the rumors. All I can say to you is everyone on our team are very confident as far as where we're going in the future. Doesn't, mean that we don't have some tough sledding along the way. But our goal is to basically have the debt down to a de minimis value and to be profitable in each one of our business units and continue to grow each one. So it says in what quarter we expect to be profitable. I've answered that. And then there's a very technical question. If the fund rate stays the same, can Voxtur become profitable without more dilution? The answer is yes. With 10-year yields rising strongly, knowing mortgage rates are correlated in the 10-year, and economists, hedge fund managers, and macro people calling for higher for longer, how do you see Voxtur successful? This time, we need to see positive cash flow before Voxtur runs out of money. So I think I've answered the question, right? We do believe that we're going to be, cash flow positive in this quarter. A major contribution for that, and I'll be talking about that later, is Blue Water. Everything that we had hoped for Blue Water is now crystallizing. Blue Water is coming back. Blue Water, and I'm going to, give you a whole dissertation of the things that Blue Water is doing right now, and and how they're blossoming. I mean, Al Qureshi and his team have been through hell and back because obviously tripling interest rates hurt the business. So flow deals basically not stopped, but certainly fell off tremendously. MSRs became difficult because, most banks or people that were purchasing MSRs, they have a concentration level. And I'll say it in a pretty rudimentary way, but let's say banks are allowed to invest up to 10% of their assets in MSRs. So what happens if the MSR value rises? It means that they can buy less because they have to stay within whatever their concentration levels are. And so what happened to Blue Water when the interest rates tripled was that some of their major customers that they were buying MSRs with basically paused, not disappeared, but paused. They will be coming back. Interest rates are stabilizing. They may not fall off as quick as what they came up, but we believe they're stabilizing. And we've got, and I'll talk about it in a few minutes, but we've got some really real and apparent traction that Blue Water is getting, and it's everything that I was hoping the business would be. It was just, if you want to call it bad timing, but to be perfectly candid with you, opportunity is getting the opportunity to buy it. And you value businesses over the term of 3 to 5 years. You don't always say, do you get instant gratification? A really good operator, a really good business. We're really, really happy we have it. Debt is currently at 25 million with possible asset sales. What would you like it to be by the end of 24? We'd like it to be de minimis, and that definitely means less than $10 million. We hope it's less than $5 million. You make money with debt if it's handled properly. When you get hit with a fastball where interest rate rises so quickly, and we went from 6% money to 14% money, it has an impact. We'll talk about the austerity measures that we have in place with future questions. But right now in today's marketplace, the key is to be out of debt. So we're working on that, and we're confident that we'll have things in place by the second quarter per share of this year, if not the first. Is Voxtur current valuation a threat? If it drops, will it become a threat? Is there a limit below which a low stock valuation become a threat? Well, listen, the biggest threat is that it's hurt our shareholders tremendously. All right. A threat is that we needed money to grow the company and we had to go out and raise. That's a threat to the company. So the key is that we need to move some of the assets that are not strategic. I think we would be doing that anyways, probably doing it faster than what we would have. Sometimes, because of real and apparent market situations, you're forced to make those change. But when you look back at it in hindsight, you should have made those changes anyways. So, we love, our strategy and our vision. We will be profitable. I mean, we weren't profitable. We were burning a lot of cash before as we were growing, and we hired more people than probably we should have, and we've had the right size. And again, I'll talk about that, in the following questions. But how confident are you in Voxtur being alive and profitable in 5 years? And I'm very confident. I love the company. I think the strategy and the vision was strong. I am so affected by these stock prices falling. Today, in the marketplace, not only less than a year and a half to 2 years ago, companies were being valued, technology companies were being valued at 30 times revenue, not profit, revenue. Now, if you're a pure technology company, it is based on EBITDA, not on revenue. And you're lucky to get anywhere from 10 to 15 times. If you're growing, like a hockey stick, and it is pure technology, you may get 20. We think that we can fly in that rarefied air in the not too distant future, but that's what happened. The whole marketplace shifted for everyone, not just Voxtur. The problem is that the people that invested in Voxtur feels that Voxtur is the center of the universe. And for that, it bothers me tremendously. I don't like anyone to lose money. No one ever really went into this thing knowing that interest rates were going to triple. And even if they do, and they did, we think that the pivoting that we've done and the changes that we have made, will benefit the shareholders in the long run. The only difference is you're not going to get immediate gratification. And so what happens is that when the stock prices fall the way they did, then all of a sudden you're getting into innuendo. You're talking about salacious events that that did not happen. You're talking about everything that comes under a microscope. And frankly, the shareholders need the management team to focus on the business that we have, focus on the strategy that we have, and make sure that we implement it properly and make sure we become very profitable quicker rather than later. And so that's what our focus is. So the next question is, we're going to talk a little bit about Blue Water. And, I've got, a couple of things that I've, had Al prepare for me. And again, there's a lot of, I guess, detective work that's being done by your shareholders, and I think it's laudable and it's amazing, but sometimes it doesn't always come up to the right conclusions as far as what's happening. But as you know, I have to stay away as much as I possibly can from talking about any of our clients, because that's what our clients have stated. And it's not hard when you go to architect.ca, it's whatever it is, to go into these sites and figure out that, Voxtur is doing business with this lender, Voxtur is doing this business with this sub-servicer, Voxtur is doing this with this mortgage origination company. And that's what the world is like today. And when very smart people are able to put pieces together in a very smart way. I'm not able to confirm or deny, and I'll just leave it to whatever purpose is being done and say this. So let's talk about our products of Blue Water, and I'm just going to kind of read some of the things that Al has said, because he sends it much more more articulate than I could. Pre-close, post-close, transfer, and correspondence as a service offering. Pre-close is we're underwriting loans before they're closed. We just signed our first customer here. Post-close, we continue to propel this business. Transfer. We have identified a number of opportunities that we have closed. We're currently in testing with a very large top FHA lender for transferring their docs in connection with their acquisitions. But we believe that this will offset some of the drop in volume that occurred after acquisition with the advent of the interest rates closing. We're back essentially where we were right now at the time of acquisition as far as the number of transactions, but because of Al's increased number of service offerings, his revenue will be better. Al's developed a whole loan trading platform that does seed to table work. We already have 3 originators with signed statement of works that are rolling out as we speak. Expanding asset coverage. We are now transacting whole loans, second liens, and will soon be powering a top-tier non-QM mortgage conduit. We have built a pool optimization capability that allows non-QM conduits the ability to transact loans en masse. This is a new technology that gives our conduit partner the ability to maximize profit through automation allocation of loans across investors and warehouse lenders. This is new and this is exciting. Through our whole loan capability, we are working with our conduit partners in direct relationships to carve out opportunities in whole loans that include the Community Reinvestment Act and specified pool execution. On the bulk transaction side of things, we have established Blue Water as a top trader of assets with as many as 6 bulk trades that will be settling in the next few months. Blue Water investors have under commitment 6 deals totaling nearly $5 billion in the January to April timeframe. This is not $5 billion to us, but $5 billion in trades. We have an additional 5 deals with a UPB of 3.6 billion that are bidding in the next few weeks. These are highly lucrative transactions that will drive incremental revenue for the company. With regard to our TMC relationship, the Mortgage Collaborative, that stands for, we are piloting several new sellers through our conduit platforms and introducing investors. We expect that revenue to come online within the coming months. We recently partnered with ST on putting forth our token-ready solution. Tokenization is the future. We expect to be in place to offer tokens on a go-forward basis, perhaps within this quarter, but certainly next quarter. Again, we're not a token company. The reality is this: is in tokenization, there's been legislative changes that have taken place that basically allows for, well, it's certainly snapped down as saying that, you know, token companies have to have real assets. They have to have, they can't, you know, come up with nefarious products and things that really are not tangible. So what is one of the best and most lucrative real assets that exist out there is real estate. And where is an opportunity that if someone was to, you know, invest in a fund, a tokenization fund, what would be the best place to go? Well, it'd be MSRs. Think about it. They can get 12 to 15% return on their money. They start getting paid day one, because essentially that's what you're doing when you're trading servicing rights, is you're getting paid to service the existing mortgages. So they get the returns they want. It's a real hard asset that the whole world knows, and you start getting paid immediately. So our wanting to get involved in this is not becoming a token company. We're not going to be, we're certainly not a token fund right now, but Al merely wants to carry on and expand the service offering to tokenization companies. We're going to continue to be paid in cash. We're going to continue to deliver in cash. We're going to continue to buy MSRs every which way, in the same way that we always have. And so, you know, we're really, really excited, you know, about the future and the expanded offerings. I can tell you that just, you know, what I've read alone, it's so exciting to me. It may be a little bit more difficult for you guys to digest, but what a great business. And what becomes even more exciting is that as we get involved with other entities that are mortgage origination companies where we build relationships with, we're now also going to have the opportunity to be able to invoke the other service offerings that are part of the synergistic benefits of Voxtur: tax certificates, flood certificates, valuations, title, whether it's AOL or whether it's, you know, the regular title business. That's what it's all about. So Al is back. We just completed, a large bulk deal recently. We think that Blue Water is going to carry us. And because of synergistic benefits, they're going to be the company that we always wanted, that we knew was going to be. And so it's only going to get better. All right. Interest rates start dropping a bit or stabilizing. It's only going to get better with expanded offerings that Al has: pre-close, post-close, quality control, amazing opportunities. So what a great, a business that's in, and how synergistic it is for us. So pretty excited about that. Let me talk about title on the next piece of business. And Ryan Marshall, and Jim Adams, who are leading the title business, I just want to read how they see this. This will take me 2 minutes, but it's so important to see the excitement and the ingenuity and creativity of our team. Say goodbye to the era of laborious, manually filled out documents and disappointing return rates on your opening packages. Voxtur Verify's intuitive wizard ensures that your buyers and sellers effortlessly navigate through reviewing, completing, and e-signing all essential pre-closing documents. Once finished, these documents seamlessly return directly to your escrow file. Considered it signed, sealed, and delivered. Rest assured, with the secure transmission of the entire opening package, including wire instructions, utilizing state-of-the-art end-to-end encryption. Our exclusive system facilitates buyers and sellers in navigating the review, completion, and signing of the opening of documents. Compatible with most of the industry's leading escrow systems, Voxtur Verify ensures a seamless delivery of documents and data back to your escrow file. We're doing that right now. It's called pre-docs, in industry standards. We've hired one of the best salespeople in the business, and so we're really excited about Rob coming in and expanding that offering.
Is this a starter kit?
No, this is called pre-docs. All right, and so we're starting to get revenue now. We're out selling it right now. It's the only kind of fully digitized package on the pre-doc side. It's an evolution, right? So we start with what I call pre-docs, which is what I just read to you. Let's go to version 1.1. Voxtur Verify's decision platform makes critical real estate data and intelligence accessible through key decision-making stages in the real estate transaction. This eliminates silos between title and closing and other workflows, providing a streamlined consumer experience. An easy-to-use workflow tool, it offers loan officers, title agents, and underwriters customized insights about a property and consumer within minutes through a dynamic customer experience that focuses on highlighting areas of transactions needing further explanation from the consumer. For title agents, digitize and automate your title research best practices based on a tried and true underwriting logic, data, and industry experience with title decision. Quickly, easily, and securely produce, deliver a clean title commitment or title condition report to your lenders, depending on the transaction type, for an accurate and efficient process. For lenders, include a simple verification step at loan application to know if there are credit, title, and potential underwriting issues that may affect timing of a transaction, whether it may be fast-track to closing, address issues during upfront workflows with the consumers, and ensure focuses on the opportunities most likely to close. Starter kit. The way we look at it, we know that there are thousands of transactions that take place, every month. We know that certain companies are offering starter kits right now, typically $125 to $130 to prepare that. Through our technology, our AI, we're able to produce the same documents using technology for $70 or less. A massive opportunity. We're still working on that right now, but we're hoping that we go to market in a material way once pre-docs is out of the way, or as incorporated, because pre-docs is just basically another step that'll include starter kits, right? So that's phase one. This is phase two. All right. And then basically we can go to version 2, which is basically, without getting into it, fully digitizing the whole loan officer process. So a loan officer will have to sell, but we'll be able to basically, the engagement with their lenders, title agents, and underwriters embarks on a new journey with AI supervised learning models, where user interactions begin to shape the trajectory of every transaction. A digital loan officer that can auto-populate your 1003 form while providing a comprehensive report to a loan officer with all risks, loan level underwriting qualifications, and more. That is the full Monty of everything we're doing. That is what we're going to be doing. So who are we as a title company? We bought a title company, as everyone knows, from A-Law. And with the advent of, I guess, COVID and then the interest rates in that, title companies have been massacred. But one of the reasons that we bought it is to, number one, fully engage with our clients, to provide a good quality service, fully engage a transformative model that we're taking place, which is pre-docs, starter kits, and then the full loan officer. And ultimately, what we want to be is a full technology provider. So we want to go to lenders. We want to go to the title agents. We want to basically provide a fully digitized AI, inclusive opportunity to cut costs by thousands of dollars. All the while continuing to deal with lenders and title agents. And again, ultimately, not be that, that guy in the middle. So now you kind of talk about AOL. Well, obviously with all the transactions subsiding, and certainly, taking a toll on AOL. But really what it gets down to, and I think that what is the most important for us, Mariusz, is the technology around it. Ryan Marshall and team have built a BestX platform. They can go to any title requirement and do a fully exhaustive analysis of what is required. They know what is being charged for normal normal title, where AOL can apply or not apply, and what is the best tool that we can generate that realizes the highest, savings for the client. And so what we built, with our BestX platform, what we built with a platform, what we call Switchboard, is to be able to not only take that, but directly, connect it with the loan operating, with the LOI. So, a major technological advance. And so BestX is up and running right now. Switchboard is up and running right now. Two great platforms that Ryan Marshall built. I mean, we're so happy to have Ryan back and helping us build and become this technological juggernaut. And so AOL, we're offering AOL, but really what we're offering is the consumer the best platform that's available for them, that not only includes price, but includes, coverage, insurance coverage, everything that basically will best represent the consumer as far as what they're going to need. So what we're looking at right now is we approach all of our clients right now in a holistic way. Use our BestX platform, determining, when AOL is appropriate, when it's not, providing the customer with the best experience that they can get, that not only just generates and concerns yourself with money, but the best insurance platform that they can protect their rights on the home that they're going to own. And essentially, because we are looking at it 100% as far as the most optimum service offering, we're not missing out. Something that is AOL, we get. Something that is a normal title, we get. Probably 10%. Can lean towards AOL, and 90%, leans towards regular title. Because of our BestX platform, because of the technology that we're producing, I mean, basically, we call it seed the table. We want to be able to start at the beginning and take the customer experience right through to the end to consummate, the sale. So the full digitized loan system includes all of the technology that we can provide to everybody. And it includes, as I said before, the BestX platform to make that determination, and also to participate in AOL or title. Where do I see our business down the road? Long term, probably technology provider to provide to anyone that's providing title, right? Again, when we bought ALAW, it showed pre-COVID $20+ million a month of profitability. During COVID, they still were profitable, but diminished. Our view was that COVID's not going to last forever, and we'll be back to the normal business and be profitable and be happy with the deal. So guess what happens? COVID leads right into interest rates taking a skydive too, and so obviously the interest rates rose because the government felt that it had to basically check inflation. Well, what did that do? It reduced the number of transactions in many cases by 80%. What's that do to the title business? Well, if you do title the normal way, the previously normal way, you needed a whole bunch of people. You need regulatory compliance. You need licensing compliance. You needed, settlement services people. I mean, you needed lawyers. You needed, like, coming out of the yin yang. And when all of a sudden the transactions go down, it's really, really difficult to make money. And so formerly the ALA title business did not make money. And we kept waiting and waiting for it to come back. Enough. So basically we brought Jim Adams and Ryan and that team in. And for the first time since the 3 years ago that we bought it, this title company is profitable. Enormously profitable, not right now. Every day it's getting better. And now that we've got our pre-docs that is out there being sold right now, leading to the spring, late spring, early summer with, our starter kits, leading ultimately to the evolution of the full digitized loan officer. We believe that this is going to be one of, if not the fastest growing business that we have. Because think about it, we're now being clients for everybody. We're not going to be competitors. We're not going to be the hand that bites. We are going to be a technology provider. That's what we're going to be, so that everyone can use it because it's quicker, because it's more affordable, and it's definitely more accurate. We benefit everybody, ultimately the consumer, but it's going to benefit significantly Voxtur shareholders. And that's our strategic plan for title as we go forward. Let's talk about ANOW. So when we bought the ANOW business, loved what Marty Haldane was doing. But what was most attractive to us was the appraisal direct. And that's essentially kind of bypassing, the AMCs, right? And going directly with it. And so we have a large wholesale lender as a client. We're talking to another number of other similar clients to try and, install appraisal direct. It is unprecedented. We have no competition. And I brought Marty Haldane back, who was the founder of ANOW, and he's now back working with us on a full-time basis to help us continue to grow and to continue to be profitable. But the business is profitable. It's doing well. It's growing. We're doing reports for appraisers. Appraisers called Reports Now. We're doing appraisal direct. We've got a number of other initiatives. That whole floor plan layout, sketching, data integration is all going to be under that valuation platform called ANOW. So that's basically that whole appraiser business, is going to be replaced by what we're doing. So got Marty back, and happy about that. And let's talk about RPTA, which is, another big question for everyone. How is RPTA doing? How's it going along with the Ontario government? How is RPTA doing? So Jeff Young leads that. He's been working with the province of Ontario for a couple of years now. We got the acquiescence, of all of the Minister of Finance, Minister of Municipal Housing and Affairs, the Premier's office. Jeff has been steadfast in bringing that to the table. Thought we'd have it by now. It's kind of like that old slogan, it's on the truck. Why we love it? It's a predictive analytics tool. It tells you whether your taxes are too high, too low, by how much. The province will be buying it on behalf of 444 municipalities. We'll be able to roll that out. We expect to have more involvement with the province with respect to annual audits, on the assessment rolls. And we expect to be able to have more direct relationships with all 444 municipalities. A lot of the problem before was that they didn't have the money to buy RPTA. Now, because it's going to be provided to them, if we went to a municipality and said, listen, based on RPTA, based on the analysis that we have before us, we think that you're missing $500,000 of new tax dollars that should be generated that are not. We'll have empirical evidence behind that. If we went to a province or to a municipality and said, we think that there's $500,000 there, can we be engaged? And then they're going to say, well, what's it going to cost? And we're going to say, well, listen, let us show some success, and we'll charge 25 grand or whatever that amount is. And so my view is there's 444 municipalities. Probably about 20 of them have their own staff. So there's probably not an opportunity other than having RPTA. There's not a lot of opportunity to work with them except for specific tax policies and things that they would need our help on. But we think that the gate is wide open. We think it's just an enormous opportunity. Jeff has got a great relationship with the province of Ontario. Can't happen quick enough. So again, love RPTA, a big business opportunity for us. There's lots of talk out there about our former CEO, Jim Albertelli. Jim went back to the law firm. We continue to do work with Jim. He is very much involved, in the title side of the business, providing, attorney work. And we continue to do a lot of the work for him on settlement services. We believe that we have a good relationship with Jim. He's a good man, and we have a working relationship with him. It didn't quite work out. It's not for us to say whose fault it was. It's really, the economy went for a kicker, and we had to adapt, and we had to make changes. And there's a lot of changes made in the C-suite. But our view is that there's lots of speculation out there that Jim may be doing this, and Jim may be competing, and Jim is doing that. We're not going to involve ourselves with innuendo and speculation. We have contractual agreements in place, former employment agreements, purchase sale agreements, and everyone knows what they are, and we fully expect them to be honored. And so if empirical evidence has shown that they're not, we'll cross that bridge when we come to use whatever remedies we have in law. But I don't believe that it'll happen. We have a good working relationship with Jim. And so we think that, I'm not going to sit there and get involved in the edge of night, TV soap opera theories. I'm not have time or the energy to focus on things that we do not know. Through the fullness of time, if some of those things happen, well, we'll deal with them when they can. But right now, if I'm putting time and energy to that and not in running the business and building it, shame on us. So I hope that we have a good working relationship with Jim Albertelli and his team for many years to come. We provide things that they do not provide. Time will tell. But I like to be the optimist and take the positive route, and that's where we are. There's some general questions here. What does the revenue mix look like across the business units, and which line of business do you feel represents the most reliable near-term revenue growth? Well, I talked about tax, all right, and the RPTA. That's a big focus for us. Haven't talked about Benutech, data company, tremendous reservoir to provide data and data products like Title Toolbox, where we can go to other companies and provide that data for nothing. But what does it do? It just spawns an opportunity for an enormous number of other products in other business units that we can use and grow. So we're looking at every creative, ingenuitive way. Benutech is profitable. Love the guys. And, you know, it's basically finding a way to maximize the growth. And so they've signed up a couple of fairly big clients. The business is on the up and up. It's growing. We like it. And so that's where we are with Benutech. We talked about Correcty's business and Blue Water. We talked about the title business. We talked about Jeff Young's business, and we talked about ANOW. I mean, we went through all of the growth opportunities of what we're doing. Basically, the thesis is maximize technology and expand the client list to be and include, but not limited to, AMZs, more lenders, etc. Okay, what is the outlook for this year? We expect this year to be a coming out, not in wild abandon, but we expect to be EBITDA positive, and cash flow positive. That is our hope. Never guarantees in life, but I believe that to be happening. We're not in the business of giving forward guidance right now, and especially with the economy and the uncertainty of what the Feds are doing with interest rates and that. It's a difficult thing, but we believe that we can be cash flow positive and EBITDA positive in this economy with these transactions. If the interest rates stabilize or fall a bit, there's going to be more transactions. It's better for us, even in still. But if we can survive and profit in this economy, we can do that in any economy. Why is there no insider buying? Interesting. So obviously there's legislative requirements when we can buy and when we can't. It's all hedging around the financial reporting. You can't you can't trade during kind of financial reporting until it's released. Well, there's also another requirement that when you have other material issues going on within the company that is insider, you can also trade then either. So basically, for the last year, we've almost not had a day where we can legally participate. We've always had something going on, whether it's an acquisition, whether it's a disposition, and commingle that with financial reporting and some of the stuff that's been going on. We got hurt terribly by our auditor Markham canceling an audit that they were supposed to do to us two weeks before it's to be delivered. No reason was given for that. Subsequently, has been reported that they were sanctioned by the Canadian Chartered Accountants Association, as well as the SEC. They were fined with respect to the quality of audits that were being done. And, we can only surmise that they made a decision that on, small venture companies where it's difficult, to do very exact audits, and there's a lot of things that have to occur. I think that they felt it wasn't a risk. And so as a consequence, we got hammered by it. The amount of damage that was done to us as far as having to bring a new auditor up to snuff and pay for something that had already been done before was devastating for us. It's money that small venture companies can't afford, and so that hurt us badly. But we're really happy with our new auditor, MNP. They're on time, they're thorough, they're professional. We've got a great professional working relationship with them, and it's been seamless. So sometimes there's small blessings, right? But essentially, there was some hurt. There was some hurt there. Some more questions. Oh, there was a question on a bankruptcy division. We built some bankruptcy technology. We're continuing to develop it. We have a very large lender that has been paying for our development. They pay us a monthly fee to do all that development. They've been doing some restructuring internally with respect to APIs and how the whole, technology framework is working within their bank. Everybody knows, and it's almost without exception, the amount of hacking that has been done on all of the kind of clients that we have right now with ransomware and everything else has been, I'm underestimating the impact that it's had. And so everyone is being forced to kind of retool, to kind of bring all of their technology up to snuff. And so right now we're looking at June, as the the possible delivery date, of our bankruptcy platform. I'll be working in conjunction with Jim Albertelli and his team on that. And so, we continue to be, optimistic that that'll be done. We're disappointed that it's taken as long as it has, but we spent a lot of time and a lot of energy. And so we'll continue to do whatever we can to fast track that. And we have salespeople out there trying to bring that on to other banking and financial institutions as well. And we have 3 or 4 that have basically indicated to us they have a strong interest in this, and so we're pursuing those opportunities as we speak this quarter. But again, it's there. Nothing ever happens as quick as what you want, and so we're just doing the best we can. How are you doing personally? Are you currently in the process of searching for a new CEO given your interim role? Well, it's been a tough year. I mean, we're 7 days a week. We're 70 hours, 70, 80 hours a week that my whole team is working. We've replaced the CEO, CFO, the chief legal officer, the chief revenue officer, the chief of staff, and we replaced every one of our people with existing people we had. We didn't add any more. We've all taken on double duty roles. We've reduced corporate costs by close to $10 million a year. We have went from in excess of 500 people, and we reduced that count. We're down to 175, and if we complete a couple more non-strategic acquisitions, I wouldn't be surprised for us to see us down to 125 to 150 people. So, I mean, we have done everything you possibly can. Anything that you can think of from an austerity standpoint, we have cut. Our marketing, has been, limited. Communications obviously has been limited. You can't afford it. Pete, we need to make money. That is the bottom line. We need to be profitable. We need to deliver and clean up the bank. And, everyone's working double duty and triple duty. So in a perfect world, I didn't sign up for this, but as you know, Mariusz, as much as anyone does, people invested in this company. We have to take it serious. It has been a tremendous burden to me that our stock prices, has fell, and that people have not got returns and people have lost a lot of equity in this. No one more than me personally, probably, but there's been tremendous loss and tremendous hardship. And it hasn't gone, fallen on deaf ears and gone unnoticed. We've all personally, the management team, because we own a good portion of it, have all been hurt significantly. It has been probably the single most devastating year in my professional working life. But you got 2 ways to go, right? You can be like a lot of people today and, they think about themselves and they just giddy up and go on to the next one and say, tough luck. Or you can hunker down and do exactly what we've done. We basically totally retooled the whole company. totally refocused based on, economic initiatives, cutting our staff, by 80%, asking everyone to step up, basically removed, our bonuses, which we've never got. I've never gotten a bonus in my life with this company. And a lot will say, well, good for you. You shouldn't, because we haven't been making a profit. But we've made such great strides. We've got a wonderful management team in place. So if I'm going to bring a CEO on, which I am, which I shouldn't say I am, which the board is, right? Wouldn't it be nice that if we got our debt cleared up, and the company retooled and focused and being cash flow and EBITDA positive, so the new person that comes in, which will be much more ingenious and much more creative than I am, that can take what we've done, take that experience, add it on, and continue to just basically thrive, as a new leader of this company. And that is our focus, and that is going to happen this year. All right. But what I don't want to do is bring a CEO in right now, have all of the shareholders wanting to hang him up, having nothing but derogatory things to say. And, I understand it's a lot of stress. I understand that it hasn't been good. It's been painful. It's been a tremendous burden on my board of directors as well. I mean, the issues and that we've had to deal with, starting with just so many things, but starting with, changing of the auditors, dealing with the banks and making sure that's happy. I mean, it's been a year of hell for everyone, but without exception, the whole management team has stepped up. We retooled this company. We're on our way to profitability. We don't intend to do any more dilution of shares, other than right now, obviously, until we get, a couple more of the business sold, cash is king. So we had one of our leaders in the company that we owed $500,000 to as part of the purchase and sale agreement. We got him to agree to take shares. Is number one, is a testimony to his confidence in the company going forward. And number two, it's a preservation of cash while we get things done. It's a big deal. Our board of directors have all stood up and they've taken shares instead of the cash component that we contractually were obligated to. Again, another selfless way of stepping up and making sure that we do whatever we can. The number of shares in both cases are de minimis in relationship to the total number of shares outstanding. And so what I think is a very selfless, very generous, display of their commitment to this company. Some view that as, why are you giving out more shares? It's just a tough time to be in business today, and especially with what we're doing. Many companies have went under. Nobody in this company is, basically, taking off and running and leaving it to somebody else. No one is going to quit until we've got, our success. And from my standpoint, approaching my 70th year this year, I didn't count on having to work 70 to 80 hours a week. But it is what it is, and we need to turn it around. And I need to hand this over to a CEO that has 100% focus on growth and profitability, and not having to look in the rearview mirror and start ducking with slings and arrows. And so that's what the plan is this year. What surprisingly is the number of candidates that are out there so badly want to be part of Voxtur. Why? Because we offer something that nobody else is. Our technology, the advancement of our technology, the position that we place with that technology, the market penetration that we're allowed to, to survive in that, under that position is phenomenal. Very strong, people in the industry that want to step up. I feel extremely privileged that they want to come on board. So count on it. I expect to stay on the board. I expect to carry on my old roles and deal with capital markets and banking and strategy and vision and, whatever else is needed. I want it right. I want the share price, returned, to, previous highs. I want this to grow, and I want everyone to get, the money back and some good returns. And some may say wishful thinking. I mean, listen, we're doing and giving 120% of, kind of where we're going. And what share prices are possible to promote to the NASDAQ? Well, that's the least of my concerns right now. We need to get to profitability. In NASDAQ, you need the share price to be, I'm saying $5 from our standpoint. It would require a consolidation of shares. But the most important thing is we need a material positive event to happen to, reinvigorate, the shareholder community. Our goal is still there. I just can't give you any timeline of when we're going to be on NASDAQ. There are a couple of intermittent steps that we can take, but I'm not going to elaborate on that right now. The whole focus is, increasing shareholder value, and we have a plan for that. It says, why am I involving myself in a diabetes business when Voxtur has failed? First of all, I sit on no boards. All right,
Gary, let me just explain, because some people might not understand. There's a company called ExoStem that Gary's involved, I'm involved, and that's the diabetes company. It's a private company, and somebody asked a question, why is Gary involved in another company? So go ahead, Gary.
So be clear, I've made an investment. I don't know anybody that is in this listening group that have 100% of all of their assets in one company. Nothing has even remotely close to my investment in Voxtur. But, at this age, I do have a portfolio. I do have, an advisor, and I do have shares in other stocks. But, there's no active role. There's been no payment. There's just nothing. I'm an investor, and that's all I am. So I don't know what they're thinking, but 190% of everything I do is bleeds Voxtur, and that's exactly where my efforts are. Voxtur's communication is weak. Why doesn't the listed company have a more communication person and a clear communication strategy? Can't disagree with it. It's just, it's just about, us becoming profitable and us being able to have some of the niceties in life, and that is having better communication, more proactive communication. We have hired an outside company to help with marketing and communication, but it's certainly not as buoyant as what we like because we can't afford it. Right now, our focus is on clearing the debt and growing our business, and then getting back to what, if you call a more stable, growing company is. So we're certainly much aware of it. As I say, we've reduced 80% of the staff. I mean, it's a massive changes that have taken place, and we've done that all in the last year. Going from burning, $3.5 million a month to a company that's going to be, cash flow and even a positive that is imminent, is a massive turnaround, and it's come with some fairly strong, decisions, and we've lost some really good people along the way. But ultimately, the only thing that really matters is providing value to the shareholders and providing, the value to our customers, and honoring the employees that we do have, and making sure that they got a great place to come to, that hopefully we'll be back to expanding again in a much more measured way. And now that we've got the lessons of what happens in an economy when interest rates triple, hopefully we'll never go down this road again. I think, Mariusz, that's, all of the questions that I've went through. There were a lot more than that, but mostly they were, repetitive. But that's, I think, basically, most of the questions that were asked of me.
Yeah, it is. So I think this was your best interview you ever did. So I appreciate your time, and I hope that people will appreciate the interview.
Well, thank you. I mean, we care very much. You know, we do. Thank you very much. We'll talk.